Good day, good day. Hello, hello. Guys, how are you doing? Oh, let's sort out the screen. So, what is going on, guys? What is going on? Oh, just bear with me one moment. Yeah, we are ready to rock and roll. Thought you made it. That's good, mate. That's good. It's great to see you around. You start getting used to the UK. So, starting, guys, yesterday, oh my god, we nailed it yesterday on the S&P. Did you get some trades yesterday? Did anyone got into some trades? Because really, the S&P was simply on fire. Um, from where to start? So the market opened there 4:30. We had that move. We let the market settle. Nice retest here, bearish engulfing. Boom, off to go. Then look at this. Look at this tiny bearish engulfing, guys. That was, you couldn't miss that one. Look at this. Fibonacci 61.8, bearish engulfing, rejecting this region instantly. Got into this order block area. And I confirm with volume on the ATAS platform. I can show you as well. And from then, actually, let's start with today to see what's going on today, if we have something on gold or on the S&P. And then I will walk you through the couple of setups yesterday and how did I get them, the volume and everything, so you can learn. Ruben, good morning, Ruben. Gold, gold. Price try to come up. See where we had this nice level, 4,435, and then bearish engulfing during the Asian session. So the market sold off. Try to pull back if you want. I will show you a smart way to play around with your chart. So first thing you can put, today is Tuesday. So here it's a simple method, guys, very simple method. First things first, you can plot a vertical line where the market opened. So the market opened right there. What do I do next? I mark the sessions, Asian session and London session, and also going into the New York session. So what do we have here? At my time, 3 p.m., we had this London, the Asian session open, and it goes until 12 p.m. my time. So we already had that low and that high. And here I have some templates, Asian session. So I know that this box here represents whatever is going on through the Asia. Then I'm going to make another box starting from 10 a.m. my time. So far we have this there, and it goes up to 7 p.m. my time, and that's the London session. Look at this, London. So I know that now we are trading within the London session, but the overlap of the Asian and the London. So from 12 p.m. my time, which means 10 p.m. UK, we're gonna hit into the London session without any overlap. Then we are going to the New York session. So far, these are the, let's do this. Then the New York session technically starts from here and it goes up to 11 p.m. my time. And I have it, so that's from 3 to 11, and here is the template for the New York. Okay, perfect. Another thing I do is this one. Nope, not this one. I'll show you date range. So I want to mark the Asian London overlap and also the New York and London overlap. Why to do that? Because visually is much easier. Something is not, is until 12 from 10. So it goes from here, and this one here goes from there. So we have 2 hours overlap. 2 hours overlap Asian and London, this one here, and then we have 2 hours, 4 hours overlap London and New York. So if we can trade within the overlaps, we have high increased volume there, of course. So what can we put there? We can put some levels, and I find it much easier if I put my levels with price tags. So where are some key levels? First key level is this one here, yeah, and that's the Asian's high. Another key level from this chart is the Asian's low, because it just happened and today it's set up so far the range. The London, look at this, the London so far didn't break either below or above the Asian's high or low. Okay, so what's next? Next, we need to find, so we can use this as our support and resistance. So next we need to find where the market has some probabilities, yeah, for some good setups. I go down on the 15-minute. What do I see in terms of market structure? So I see these higher highs, higher lows, like this. Another higher high, and here we made a lower low. So what is the funny thing with traders? They stick to only one trading setup like ICT or smart money concept. They don't understand that the market moves based on orders and structure. So people, they see this as a kind of, I don't know, they call it internal, external, outside, downside. Guys, the things are simple. It's been the last 100 years. The market works the same way like it used to work, same way today, same way before. It's just on a, let's say, on a different platforms or on a different, let's say, volatility. So but the dynamics, the underlying dynamics remains the same. It's like, pretty much, it's like a car, guys. Let's say 50 years ago, or I don't know, 100 years ago, the cars still had 4 wheels, still had a steering wheel. Now they are just more improved. Yeah, so same thing. So the market made a higher high, which means that price went for a new market structure. So this low now becomes our solid support. The price broke and closed below that low. So what left here is move to the downside. This is how I see my chart today. So on this 15-minute time frame, I want to find an area where I can place some sell orders. If we change on market structure, then that will be a different way. So where do I want to get into? Let's draw some Fibonacci. The price rejected this area a little bit. I'll plot a rectangle around these levels. And that's my default one. So here, I need to see a clear break and move to the downside because this retracement here was quite shallow. The market might not follow through. So if we break and close below here, we're going to have the follow through and we can go for the next retracement to find some entries and sell short. Okay. This is the plan for today. Guys, if you have any questions, let me know. Iva, good morning. How are you doing? Okay, so this is the plan on gold today. Looking for short positions because we change structure, because we maintain this sequence. So let's move to the S&P 500. How nice is that? How beautiful is that? Yesterday, we went from this inside candle to a lower low. So the market is hitting even lower. There is a solid support right here. On the 4-hour, I think we're gonna break well below this one, guys. So this is one solid support. If we break and move further, I see this support here as well. And to the upside, I want to find some swings on the hourly chart, which it's like, oh man, it's impossible. The market sold off so much, so much on this one. Anyway, we're gonna plot. You see, when the market is so aggressive, the pullbacks are very, very shallow. I think all of my students, they know that really well. Saja, welcome to the live stream. How are you doing today? So what do we expect here? Continuation to the downside unless we see the buyers step in, pushing the price up and create something different. So for now, on the 15-minute, we do have another level here, this one. Let's put this one here. That's a 15-minute level. And let's add our sessions. Of course, we need to do that. So starting with the Asian at 3 p.m. my time, it's going up to 12. So this is the Asian. That's the range. Then from 10, 9, 10, we had the London. And it's going to go up to 7 p.m. my time. So this is going to be the London. And then we have at 3 here, the New York up to this one here. Guys, keep in mind that the boundaries of the ranges will change moving into the sessions. Okay, so unless the price will range during the London and the New York, then we're gonna just keep trading within these boundaries. But most of the times the price breaks and moves in the opposite direction. So the overlap, we have 2 hours. We have these 2 hours here, and that's the Asian London, and then we have 4 hours from 3 to 7. The London, New York. Okay. Let's put them a bit higher. So easier to throw some boxes here. Asian session, change them with colors. London session and New York session. So now I know exactly where am I and what I am looking for. Through the Asian session, the price was selling off aggressively. Now we are still within the overlap between the Asia and the London session. So we expect some sort of retracements, because really the price never drops, never goes down in a straight line like this. See this one here? Barely we got only 2 bullish candles, and guess what? The one was a long leg doji and the other was just a really small body. This one here got faken out. This is a classic fake out. The price does it all the time. If you study candlesticks, this is one of the best ways to anticipate the market. When we get these weeks after a strong downtrend, people sadly think that the price will go up. There are times the price goes up, but that needs a different confirmation. What happens is that the market, if I zoom in a little bit, see this one here, the market still makes lower lows and lower highs, so it's still driven by selling pressure. Anyway, as we go down, usually the price makes a false breakout, because many traders, they went long and they have their stop loss there. So as you wanted liquidity or whatever, price then starts going in the opposite direction. So we don't expect a change of market trend. We expect retracement. Now, depends on which time frame you are looking to trade. You're gonna see different trends. If you are looking, for example, like me during the New York, I'm focusing on the 5-minute chart. That was a good trade here. We missed that one. That was a perfect trade. And that one there, 2 trades. Anyway, you're gonna see different trends, like the 5-minute chart, New York session. Maybe it's gonna range in the London, or it's gonna fall, it's gonna go up. We don't know what's gonna happen. That's why we wanna just stay focused. We are waiting for your analysis to get into a position alongside you. Awesome, that's great. So on gold, 15-minute chart, here, if we're gonna stop with a bullish engulfing, I'm gonna buy. If not, I'm not gonna touch it. I'm not just blindly buying whatever just because it's at support. I don't do that. So I want to see a bullish engulfing on gold. And on the S&P, retracement, something like bearish engulfing, and sell the hell out of that. Unless we change the market structure and we break above here, then it's going to be a buy. But for as long as the price is still intact and driven by selling pressure, we are looking to sell. Okay, guys? So this is the plan, guys. Allow me to grab my tea. case. Okay, so case. So we are here. Let me show you yesterday some cool stuff. We had some really cool stuff yesterday, guys. Especially most of you guys are watching now the live. You're my students. Yeah. So at some point, I will show you how to use the volume footbridge charts, because if there is something worth using in your trading, is this one. So let me walk you through. This one was today. No, it was the yesterday's one. Let me show you some cool stuff here. So let's go to yesterday's. Guys, we are waiting for some setups to appear and we're gonna get in. But in the meantime, I'm gonna show you some important things you can start. You can start using. That was 5. We have the cluster bars. I think we don't need the cluster bars. Yep, there it is. So look at this one here. Same candles. With these things, you get some better clues on how to expect the price to react. For example, this bearish engulfing here was in an area where we expected to get into the trade. Yeah, so that was 720, and let's go here. So this chart is the same chart, candlesticks, but if you zoom in, you can see the actual volume in real time. You can see, guys, the actual orders, real-time stuff, trading in the Chicago Merchandise Exchange. So this bearish engulfing was very interesting to me. Why? There are some factors that were very decisive to me taking this trade. And first and most simple, it was the volume. As the price retraces, I want to see the volume slow down, which I saw that. Then we had this bearish engulfing. How do we know that the market is driven by selling pressure? There is an indicator. It's called cumulative volume delta, and we can apply it on this platform and get the information of how buy and sell orders are exchanging in real time. Look at this here. The cumulative delta, as the price was going, if we start from this point here, the market was making a lower low on candlesticks. The cumulative delta was just showing a regular move to the downside. The best part, it was when the price made this false breakout. You see that, this one here, and many traders, they believe that the price stopped and it's going to go up now, which it went, but not as a trend reversal, as a part of trend retracement. And why I was more focusing to sell the market, not to buy, because the cumulative delta indicator was making a lower low, and the market came, sold off like here, and see the deviation between this low. See the difference, guys, between this low and that low. That was crazy. I don't know if I can draw on this. Can I draw on this one? I'm not sure. If I can draw, that will be amazing. but I have a drawing tool here, so maybe this one can help us today. Perfect. So this lower low, look at this. The market made a false breakout here. False breakout. It didn't follow through. But the real orders behind the candles, they showed that they were a hell of sell-off from the sellers. Hell of sell-off, guys. Too much sell-off from the sellers, not from anyone else. Real market orders, real data. Nothing has to do with any one of the brokers. We have accounts, prop firms. This is a separate real market data directly from the Chicago Mercantile Exchange. And you can have access to as well. Okay, I think I have the description of ATA's platform below, but on the data, I don't have the link there. You can just reach out to me on Telegram and I can share with you which data I use. I think on this one I have the DXFit something. Yeah, I think it's the DXFit here. So when I saw that false breakout with a continuous lower low, I was ready to sell, but the timing was crucial from where I wanted to sell. First, from a key level of resistance. Just to keep it simple, I also use TPOs, profile, market profiles, also volume profile. I'm not going to get into that stuff, okay? Because if you want to learn more about that, I can help you with that, like I help so many other people. But the point is that based on pure, simple technical analysis, that was the level I wanted to get in. So the question was, do we get it into this candle or do we get it into this candle? And how do we know where to get in? Let's take first this case here, the first one. 1855. 1855. This one. Yep. So why this one wasn't really the candle to get in? Because, not because of its size. First, it wasn't at any key level of the resistance. If the price is not at resistance, why to bother sell? We don't sell if we are not at resistance. But if you look at this one here, on the right side, on this right side, you see, I'm going to say simple words. You see how many people bought, and on the left, you see how many people sold. Or contracts, how many buy orders executed are on the right side, how many sell orders executed on the left side. What we can see from here is that we had 220 buy orders, we had 250, 300, 400, and pretty much a little bit of equality here. The only weird part on that is this one at the top, that we had 220 orders on the buy and only 26 on the sell. So it means that buyers, and the price didn't follow through, so it means that buyers got trapped. It wasn't a case to sell, honestly, because the numbers were not showing something significant. And also the price wasn't at any key level of resistance. But when the market started going up, look at this one. Let's move a little bit. So the market started going up. Guys, this here is this part here. The first green candle is this one here. We see that the price went aggressively to the upside. See how many buyers here? And what I liked is that the buyers were keep on pressing, and this one was the key number, 700, the biggest number of the candle, and it's just the platform highlighted itself. 700 were selling versus all these buyers. Still more buyers, see? There were 439 more buyers. So if the market was about to move into an exponential upward breakout, we will have seen a nice continuation. So The bearish engulfing came right after, was worth looking a little bit closer. Bearish engulfing, it's usually what I want to look for sales. And right here, we saw the trap buyers. All buyers here, buyers, and they got smashed by a bearish engulfing. So the volume was confirming that we are looking to sell. The catalyst was there, bearish engulfing, and that was the entry yesterday. When you have this information, you don't place your stop loss above there. You place your stop loss right there because you see that everybody got smashed out. So there is very, very low chance the price, even if it's going to come up for a kind of retracement, to go through the high of the bearish engulfing, because it means that all these buyers were real. So it's better to figure out if we're going to be in the trade or not, if we're going to have anything higher than that high. So in a nutshell, that was the best one. Then the other, it was this candle here, another bearish engulfing. Look at this. Look at this bearish engulfing. Bearish engulfing here, and that's the sandwich candlestick pattern I teach in the when I do one-on-one private coaching for 1940. Let's go to 1940. Here is the sandwich. So at this point here, this one, the market was in a strong downtrend. See, as the price red candles appear, the volume here was increasing. It means that the price is going down. We got a green candle, and it's this one here. The price was trying to move based on the buyers. We already see more buyers here than sellers. We have 250 buyers versus 0 sellers, guys. And then what happened? All these buyers, they bought here. Look at them. 1, 15, 48, 41, 13, 95, 77. They used to be 250, 280, 300, 200, 300, 300, 300, 300. Where are they? They are not there. We just see that sellers got them with another bearish engulfing. If sellers got them with a bearish engulfing under a downtrend, confirmation by volume, we see that delta is creating a downtrend. That was another key area to sell, and we just put a stop loss above this high, tight stop loss, because we have this confirmation now, and the rest is history. We just go for 2 to 1, 3 to 1, and that's it. The game is over. Okay, I hope that was helpful. So next time you're trading, is good to look at this stuff. The price tapped it into this area. Yeah, I didn't get the trade, and I'm not looking to buy unless I have the bullish engulfing, as I said. So nothing for me yet. 15-minute. So now we are expecting retracement during London. Anything you want to ask, guys? Anything you want to share? S&P. That's the 15-minute. See, the first pin bar didn't follow through. Of course, we are in a downtrend, but that made a false breakout. So really, I believe that we're gonna hit a little bit higher during the London session on this one, and during the New York, maybe we're gonna continue the downtrend. So because we already had an extreme sold off from Asian session, I think we're gonna go for a little bit to the upside now. Guys, I will leave you with the music for a while. Okay, okay. Weird thing today. I bought another camera to connect on the computer, and I've got this. I don't know how do you call it, HDTV capture card. Do you do you guys know how to how to connect this stuff? My goodness. So yeah, that's the thing. But what I want to tell you guys is that don't try to don't try to go against the strong trend. There is no reason, no reason. I see many people do this because they are really impatient. It's not how you want to see yourself as a successful trader, okay? You want to see yourself as a patient trader, just log in the time you have to log in, sit in front of the computer the time you have to. Imagine me, even after 12 years of trading, guys, I have on my calendar, I have booked time that nobody interrupts me, and it's those 2 hours that I do my trading. My phone is on fly mode, except from my family if something urgent happened, but I don't have distractions. I don't have anything that causes me to um, to get distracted. But do I feel bored? Yes, of course, absolutely. Do I enjoy it? Most of the times, yes. But I know that in order to become a successful trade, to keep being a successful trader, I have to keep doing the same thing again and again and again and again, and that's why it pays off. Because let me share this with you: if I wasn't disciplined and it's not only discipline, you also have to willing to do the sacrifice that it takes, guys. If I wasn't disciplined and do the sacrifice I had to do yesterday, I wouldn't be able to capture a nice straight move to the downside. Did I take it all the way down? No, of course not, of course not. But it was enough, those 3 to 1 and 2 to 1 trades, it was enough to make me a great profit. See on gold, why I didn't buy the support here? Simple, because the market, we don't know if the market will create the support. So For a support to be created, we need 2 touches to draw a straight line. Many people are very confused with what is a swing low and what is a support. Two different things, the one is the outcome of the other. Okay, so I have to wrap up for today. It was great to see you all here, guys. I wish you best luck with your trading. I'm gonna trading the New York session today, of course. Hopefully, we're gonna have a good trading. And yeah, I will see you all tomorrow. And until then, best luck. Take care. Bye bye, guys.